Billionaire John Paulson just made a move Wall Street barely noticed, but history might never forget. He didn't buy more gold bars. He didn't load up on gold ETFs. He didn't speculate on paper contracts. He bought the source itself, a massive gold mine buried deep in Alaska. On April 22nd, 2025, Paulson placed $1 billion bet, and it wasn't for a modest gain. It was a bet on the collapse of the monetary system, because in a world where fiat currencies are crumbling, whoever controls the faucet controls the future. In this video, we break down why the richest players are moving beyond stacking gold, and how moves like Paulson's are signals you can't afford to ignore. Stay with me, because what you'll hear today could change the way you think about gold forever. You're watching Don Gilded, where we chase the metal, not the hype. On April 22nd, John Paulson, best known for making over $4 billion shorting the US housing market in 2008, made another massive contrarian move. Through a partnership with Nova Gold Resources, Paulson bought a 50% stake in Donlin Gold, LLC, paying $1 billion in cash to Barrick Gold Corporation. He wasn't buying a minor operation. He was buying into one of the world's last great undeveloped gold deposits. Donlin is estimated to hold 39 million ounces of gold. That makes it one of the largest known untapped resources on Earth. But it's not just about size. The grade at Donlin is what sets it apart, nearly double the global industry average, meaning each ton of rock yields much more gold than the vast majority of active mines. High-grade gold is disappearing. Most new mining projects today are scraping by with grades that would have been rejected 2 decades ago. Meanwhile, Donlin sits in Alaska, a jurisdiction with stable property rights, rule of law, and infrastructure, a rarity in today's increasingly unstable world. But developing Donlin won't be easy. The costs to bring it online are massive. The remote location demands infrastructure development. Roads, power plants, supply lines. At today's prices, profitability is tight, which is why Paulson's move isn't just an investment. It's a bet on a future very different from the world we live in today. And if you think $1 billion mine is a risky play, wait until you see why Paulson's timing reveals even bigger cracks forming beneath the global system. Stay with me. At these prices, Paulson could have simply bought another $1 billion worth of bullion and called it a day, but he didn't, because he understands that owning physical gold protects wealth, but owning the source of gold magnifies it. Mining is a leveraged play on the price of gold. If gold rises 10%, a miner's profit margins could rise 30%, 50%, even 100%, depending on costs. Today, the mining sector remains dramatically undervalued relative to physical gold. Meanwhile, central banks are hoarding record amounts of gold behind the scene. Russia, China, Poland, Turkey, all quietly stacking. Not ETFs, not futures, physical gold. Why? Because they see what's coming. Paulson isn't acting on speculation. He's acting on the growing certainty that the global financial system, as we know it, is approaching a breaking point. Gold will not just survive that event, it will define it. And whoever controls production will dictate the rules of the next era. But Donlin isn't just another mining project. Coming up, we'll show you why Donlin could be the single most important gold asset nobody's talking about. Stay with me. Gold mining isn't what it used to be. Global gold production peaked in 2018. Since then, new discoveries have plummeted. Ore grades have declined steadily for decades. It's getting harder, more expensive, and more dangerous to find and extract high-quality gold. Most of the easy gold is gone. Mines today are often low-grade, high-cost operations that barely survive without 2,000 plus gold prices. Against that backdrop, Donlin stands out. It's one of the few world-class deposits left untapped, and it's located in one of the only jurisdictions where ownership can still be legally defended when the world destabilizes. Owning a project like Donlin isn't just a good investment. It's like owning a functioning oil field at the beginning of a global energy crisis. In short, it's strategic superiority. Paulson didn't just buy gold. He bought a fortress of hard wealth for the coming financial storm. But what happens when governments under pressure start seizing mines and taxing wealth? Coming up, we'll break down the hidden risks Paulson is staring down and why he still went all in. Mining isn't without risks. Governments under stress have a long history of nationalizing, overtaxing, or outright seizing mining operations during crises. Political risk is very real, but location matters. Donlin is in Alaska. Not Africa, not Venezuela, not Indonesia. The US legal system, despite its flaws, still offers vastly stronger protections than most mining regions on Earth. And even if taxes rise, even if regulations tighten, a high-grade, high-yield mine in a stable jurisdiction remains a priceless asset when money itself is dying. Paulson knows the risks. And yet he went all in, because the upside, in a world of 5,000 to 10,000 gold, dwarfs the risks. This is asymmetric positioning at the highest level. Risk a few billion to potentially control hundreds of billions worth of hard assets. It's the kind of bet you only make when you're certain the ground beneath the system is cracking. And Paulson isn't the only one moving. Coming up, we'll dive into the global de-dollarization wave and why gold is becoming the new silent battleground. While Paulson makes billion-dollar moves quietly, A global shift is accelerating openly. De-dollarization is happening. China and Russia are dumping US treasuries. Saudi Arabia is now selling oil in yuan. France recently completed its first LNG trade in Chinese currency. BRICS nations are building alternative payment systems that bypass the dollar entirely. The US dollar isn't disappearing overnight, but its monopoly is dying. And when trust in the dollar fades, there are only two things the world will turn to: energy and gold. Gold is neutral. It's trustless. It's recognized everywhere by every civilization across every timeline. In a fractured world, gold becomes the universal language of settlement. That's why billionaires and central banks aren't waiting for the official announcement. They're moving now. Before the herd realizes the currency they're saving is already burning. But if gold becomes the new global base, who stands to gain the most? Next, we'll reveal why owning miners could become the ultimate power move of the next era. Historically, when gold prices rise, mining stocks outperform physical gold, but with far more volatility. During the 2000 to 2011 gold bull market, the price of gold rose roughly 600%, but top gold miners like Barrick Gold and Newmont Mining saw their stock prices rise by 1,000% or more at their peaks. Mining stocks act as a leveraged bet on gold. When gold rises by 10%, miner profits can surge 30%, 50%, or more, depending on their operating costs. However, in bear markets, miners collapse harder than the metal itself. From 2011 to 2015, gold fell about 45% from its highs. Major mining stocks, many dropped over 70%. This is why most retail investors fail to capture mining's true potential. They can't stomach the volatility. Paulson isn't worried about short-term swings. He's positioning for the long arc, a systemic shift where gold isn't just an investment, but the last pillar of monetary trust. And in that environment, controlling production won't just be profitable, it will be strategic dominance. By owning the mine, Paulson sidesteps the liquidity issues, management risks, and dilution that plague traditional mining stock. He's gone straight to the source, securing upside while eliminating unnecessary middlemen. In short, while others chase mining shares during bull markets, Paulson is securing the foundation, because when this next cycle ends, it won't be paper claims that matter. It will be what you physically control. When trust in paper dies, the game resets instantly. It won't be a slow erosion you can watch comfortably from the sidelines. It will be sudden, unpredictable, and irreversible. By the time the headlines catch up, by the time your neighbors are asking about gold, it will already be too late. Paulson knows it. Central banks know it. The insiders know it. And now, you know it too. The real question isn't whether gold will rise. The real question is this: when the reset comes, will you be left holding paper or will you own the faucet? Let me know in the comments where you're positioning yourself, because the future doesn't wait, and neither will the next monetary era. Real quick, if you're the kind of person who doesn't trust the system, who sees the writing on the vault walls, I made something for you. The first official Don Gilded drop is live. These aren't your average shirts. They're a statement, a warning, and a nod to the ones stacking metal while the world burns paper. Links below. Limited supply. Because truth doesn't mass produce.